positive day for the NSE 20. We're up 0.25%. What drove trade today? Of course, we're still seeing quite a lot of these third quarter earnings filtering through, and that seems to be one of the big focuses for many investors out there. What do you make of today's trade?
I think today the market went up marginally. I think it was driven mainly by the banking sector, where we've started seeing the Q3 results coming in, which are positive. And I think this is a good signal because of the expectation of the growth of the economy. Therefore, we expected the banking sector to perform well. We're also seeing increased activity in the industrial and allied sector.
Well, just touching on some of these results, we had Standard Chartered Bank reporting a 19% rise in pre-tax profits for the 9 months to September. Cost management, of course, adding to these numbers, and it seems that they say they're going to be well positioned for the years ahead. Your view on Standard Chartered Bank?
I think Standard Chartered is a good counter at the moment. Even trading at the current price level, I think there's a potential of upside increment in the prices. I think they have the financial muscle now to increase their innovation on products and also increase their lending, especially to the SME sector, which is booming both locally and in the region. Therefore, I think a position in the Standard share will be a very good bargain.
It seems that most banks in the region have been focusing on cost-saving measures, and of course this contributing positively to the bottom line. What about top-line growth? Are you expecting things to recover significantly going forward? I mean, we're seeing loans and advances up 14%, so it seems that the positive trend is intact.
Yeah, I think one of the main reservations the banking sector had initially was a depressed economy. Therefore, the risk profile was a bit high. But now with the expansion of the economy, the risk profile is heading southwards. Therefore, I think the banking sector will continue increasing their lending rates, especially to the households. Therefore, I think the loan portfolio is going to grow, therefore resulting to an increase in interest income and therefore contributing to a higher net earnings.
Well, just touching on other banks that have also released results, looking at KCB reporting a 23% rise in pre-tax profits, and then looking at Equity Bank, which really outperformed pre-tax profit, rising by 53%. So it seems that Standard Chartered Bank is underperforming in comparison to these other two big banks.
Yes, I think most stocks in the banking sector are relatively undervalued. Also, bearing in mind of the future growth of this sector, I think both KCB and Equity Bank are expected to perform well going forward, both in the last quarter of this year and also early next year, where we begin seeing another increased momentum in terms of growth. So therefore, I think the banking sector is well positioned for continued growth in the sector.
So where would you be putting your money right now, Bernard? Which banks are looking attractive?
I think KCB is a good bargain. I think they have the financial muscle to increase their lending to SMEs. I think the expansion strategy should start bearing fruits. I think one of the concerns that I would have on KCB is the efficiency. Their cost to income has been relatively high. But having dealt with that, I think the bank is well positioned for increased growth.
Let's touch on Safaricom. Of course, the company saying that they are going to also be embarking on cost-cutting measures going forward. I mean, we know what's happening with the price wars. Everyone is waiting to hear from the company and to look at those third quarter numbers. In your view, do you think that Safaricom has a lot of challenges that it's going to have to face going forward?
I think if they are able to cut their costs, then I think it will put them on a competitive pedal. I think going forward, they still have challenges, especially as a result of the increased competition. I think if they continue investing more in the data sector, then that should be able to help them cushion the declining profitability.
Well, Bernard, I mean, just looking at the prospects for Safaricom, it seems that they're still adding around 500,000 subscribers on a monthly basis. And this is according to Michael Joseph, and just talking about the future prospects for the company. What about market share when it comes to the other big players in Kenya? Do you think that Safaricom can, in fact, keep its market share going forward?
Well, going forward, I think it will be a challenge for them to maintain the market share. especially if the other players continue reducing their tariff, that is the calling rates. The CCK has continued to, is intending to continue to lower the interconnection rate on the calling tariffs. Therefore, I think going forward, we should be able to see increased declines in the calling rates, and this will pose a very big challenge to Safaricom, whereby currently the voice revenue account for about 75 to 80%. And until they come up with a proper measure to be able to mitigate this, I think there'll still be a very big challenge for them.
Ali Kansachi, Rich Management, says that the markets still have quite a bit of upside looking towards the end of the year. He's talking about a 15% increase from here to the year end. Your view on that? Do you think that we could see the NSE 20 increasing by 15% before the end of the year?
Well, I think for me, towards December, we should be able to see low activity as people begin disposing their shares in order to be able to take up the December holidays. Therefore, I'd be wary putting a very big increase on the NSE 20 share index. I don't think it will deviate significantly from the current levels.